Equinox Gold hit a major milestone in May with the commissioning of its Greenstone Mine. I'm with CEO Greg Smith. Greg, welcome to Kitco.
Thanks for having me.
Gold is at an all-time high. It's a good time to be opening up a mine, Greg.
Absolutely. We didn't necessarily plan it this way, but we're very happy to be commencing production at Greenstone into this gold environment for sure.
It's going to be a cornerstone asset for you. I believe that you're looking at production of 400,000 ounces a year.
Yeah, 400,000 ounces a year on average for the first 5 years, and low cost production in Ontario, Canada. So very happy to have this mine coming on.
Now, you recently bought out Orion's 40% stake in the mine for about $1 billion. Why was that important?
Well, we already owned 60%,
Yeah.
and we've been pretty clear that our top M&A target was the rest of Greenstone. Greenstone's a large scale gold mine in Canada, large reserve, lots of potential in the open pit and the underground. Those types of assets are very rare, especially with that kind of production profile. And the opportunity for us to consolidate Greenstone into Equinox was always our ultimate intention. And so we were very pleased to be able to get that done and now have 100% of the mine.
I'm going to lean on your accounting hat because I know that's your background, but maybe you can bring us up to what this is going to mean. So in 2023, you did just over 500,000 ounces at an all-sustaining cost of $1,612. How's Greenstone going to change that?
Well, especially now that we have 100%, we're increasing our production meaningfully, 400,000 new ounces a year coming from Greenstone. Those will be produced at an all-in sustaining cost substantially lower than what we're currently producing at. So the effect overall will be to have higher production, lower average costs, and of course, a meaningful increase in cash flow.
Bring us up to date with the rest of the mining operations.
Well, with Greenstone coming on, we have 8 mines.
Yeah.
And the larger mines would be our Los Filos mine in Mexico, our Orion mine in Brazil, and then we've got a development project at our Castle Mountain mine in California. And, portfolio approach, but within that portfolio, we do have some other potential expansion opportunities. Building a mill at Los Filos, for example, could increase production to over 300,000 ounces a year at that mine. Castle Mountain, we're permitting an expansion that would increase production to over 200,000 ounces of gold per year. And then at Orion, later on this year, we're going to start the initial activities to go underground, portal construction, start that decline, and then we can get underground at Orion. And that deposit underneath the existing open pit looks like it just goes on forever. So I think long term, we're going to have a fairly large underground operation at Orion, but we're just in the initial stages of that right now.
The goal is to get scale. That's what's meaningful in this environment, correct?
Well, we've always had kind of a long-term ambition of reaching 1 million ounces of gold production a year. Nothing really special about that number, but it's an indicator of scale. It's a company of a certain size, a certain market cap, and so that has been our goal. Of course, this transaction to acquire the rest of Greenstone gets us one step closer toward it. These expansion opportunities will also, can bring us to that goal or even exceed that goal. But really, it's an indicator of scale, just to make us more investable. Have higher liquidity for our shareholders, have more optionality within the company to continue to add value and grow.
Stepping back, looking at gold equities themselves and how they perform versus gold. So gold has hit several all-time highs. There's been a move by gold, but it certainly hasn't been how we see levered to gold price. So for instance, the CGDX is only up about 16% this year. That's the general look at the miners. Equinox is beating that just as today. I see it's up at 20%. But what's kind of holding back gold equities right now, Greg?
I wish I knew. I think it could be a few things. One, what it looks like is that sort of in Asia and the East, there's huge demand for physical gold, and that's driving the gold price up. In the West, we still have a strong US dollar. We still have high interest rates. And, you have ETF outflows. I think we just have lower interest in the gold space, and that would extend to the equities. We also had sort of through 2022, pretty major inflation into the cost structure of the gold miners. The gold price is just now sort of catching up to that, right? So I think that would have had some effect, obviously, on that leverage to the gold price that everyone, buys gold equities for. Inflation eats into that a little bit. But finally, we're seeing inflation easing off. The gold price is running. The operating gold companies are going to start producing a lot of cash flow. And I think ultimately you can't argue with the numbers. That should start to reflect in the valuation of these companies.
You state that Equinox Gold is creating a premier gold producer in Americas. What's the advantage of an America focus?
Well, for us, management
Yeah.
certainly helps to be in a time zone sort of north-south rather than east-west. These are countries that we're collectively familiar with. We understand the rules, the regulations. They're lower risk jurisdictions. Canada, United States, even Mexico is a very respected mining jurisdiction, as is Brazil. So for us, these are areas where we're very comfortable operating lower risk. That's, I think, the main advantage.
There's three things that I hear that come to the top when talking to mining CEOs in terms of challenges right now. So those are going to be water, people, and inflation right now. Which of those are at the top of your list?
Well, I think we've come through a build and we've kind of dealt with the inflationary aspects of that build. Labor's been a challenge, in
Yeah.
Canada and in Ontario. A number of mines have come on in the last, year really, and or all at the same time almost. And skilled labor in the mining space is in high demand and hard to find. We've had to go, international to get certain skilled labor. That includes things like heavy duty mechanics or electricians, that type of thing. So certainly a lot of competition for those roles. Mining programs at universities, enrollments at like all-time lows. As an industry, we kind of need to improve on that because that's one area where we're certainly feeling some stress.
Lastly, milestones over the next 12 months.
I mean, for us, the big one is get Greenstone into commercial production. We should be there by the end of the third quarter and then ramp up to full capacity by the end of the year, start generating free cash flow from Greenstone. We're through the capital. Now we're into operations, start deleveraging the company. I think that's going to be really the big catalyst for the company over the next 6 months.
Great. Thanks for your time.
Appreciate it. Thank you.
My name is Michael McRae. You're watching Kitco Mining.